$10 billion for a private jet parking lot. Apollo is fully leaning into the billionaire lifestyle.
Oh, come on. They're just buying Atlantic Aviation from KKR. It's private equity passing the same high-end toys back and forth.
It's a brilliant infrastructure play. You get a monopoly on the tarmac.
Show me the multiples first. But speaking of expensive premiums, Biogen just dropped $5.6 billion on Apellis.
Pure panic buying. I'll tell you exactly why they had to do it. The rundown.
65 pence a share. I mean, did Atlas actually think BRCK Group was going to say yes to that?
It's the definition of a cheeky bid. You throw it against the wall, see if the board blinks.
The board didn't just not blink, they practically laughed them out of the room. Fundamentally undervalues the company, standard defense.
Still, you have to respect Atlas for trying to catch a falling knife in the UK market. But speaking of catching things, Biogen finally caught Apellis, $5.6 billion.
$41 a share plus a CVR.
The contingent value, right. The duct tape of pharmaceutical M&A.
It's not duct tape, Nate. It's actually a very smart way to bridge a valuation gap when the target thinks their pipeline is pure gold and the buyer wants to see the clinical data first.
Oh, come on. It is totally duct tape. Biogen needs this nephrology expansion desperately because their legacy portfolio is stalling out. They slapped a CVR on there just to get Apellis to sign the term sheet before the weekend.
I completely disagree. If you read the structure, those milestones are incredibly specific. Biogen is protecting their downside. They aren't just throwing cash around like Carlyle.
Okay, perfect pivot. Carlyle taking a majority stake in MAI Capital Management, valuing the wealth manager at over $2.8 billion. The private equity roll-up machine remains undefeated.
It's relentless. Every independent wealth manager with a pulse and a decent book of business is getting swallowed by PE right now. $2.8 billion is a massive number for MAI.
It's the classic playbook. Buy the platform, bolt on 20 smaller shops, flip it in 5 years.
Otsuka Pharmaceutical is playing a similar game but in biotech, snapping up Transcend Therapeutics, $700 million upfront and up to $525 million in milestones.
More milestones. You must be thrilled.
I am. It keeps everyone honest. If the clinical trials work, you get paid. If they don't, Otsuka didn't overpay upfront. It's clean.
Unlike the massive check Apollo is about to write, KKR is reportedly handing them the keys to Atlantic Aviation.
$10 billion for private jet parking lots.
We need to unpack this Apollo deal right now because the math on high-end aviation infrastructure is getting absolutely wild. The big one.
$10 billion for parking spots. That's exactly what this is.
Okay, they're very glamorous parking spots, but yes, Apollo is reportedly handing over $10 billion to KKR for Atlantic Aviation. And honestly, this feels like the ultimate private equity flex, buying the infrastructure that other private equity guys use to fly to their Hamptons houses.
I knew you were going to make it about the Gulf Streams, but look at the actual footprint. Atlantic operates fixed base operators, FBOs. They control the fuel, the hangars, the maintenance bays at over 100 airports. Apollo isn't betting on luxury travel, Nate. They're buying a monopoly on the tarmac.
I completely disagree, or at least I think you're underplaying the macro narrative here. The ultra-wealthy aren't going back to commercial first class, ever. Apollo is looking at the wealth gap, they're looking at the massive backlog in private jet deliveries, and they're buying the toll booth. It's an infrastructure play, sure, but it's fueled by pure, unadulterated luxury demand.
A toll booth that KKR is extremely happy to sell them. Don't forget KKR bought Atlantic just 3 years ago for under $4.5 billion. They merged it with Ross Aviation, drove up the margins, and are now flipping it to Apollo for 10. That's the real story here. KKR just doubled their money on tarmac real estate in 36 months.
See, that's the banker dream right there. Buy a bunch of unsexy concrete, slap a premium brand on it, consolidate the market, and sell it to Apollo for a $5 billion markup.
It's a phenomenal exit. But I really have to wonder about Apollo's upside at this valuation. Where's the growth? You can't just magically build a second private airport in Aspen or Teterboro. Voices. So the consensus from the analyst desks this morning is calling this Biogen deal a, quote, strategic necessity to offset their legacy portfolio.
Which is a very polite banker way of saying their old drugs are stalling out and they desperately needed to buy a new pipeline.
Exactly. $5.6 billion for Apellis, $41 a share. But here is the part the analysts are glossing over. It includes a contingent value right.
Ah, the classic CVR.
Right. If you are so confident this is a strategic necessity, why hedge with a CVR? It screams that Biogen isn't totally sold on the long-term data for Apellis' rare disease pipeline.
I have to push back there, Maya. You're reading way too much into the CVR. It's just smart risk allocation. Apellis gives them immediate scale in immunology and nephrology. Biogen had to make a move. If they overpay slightly, it's still better than doing nothing and watching revenue shrink.
Paying $5.6 billion just to do something is exactly how you destroy shareholder value, Nate.
Spoken like a true cynic, but look, the market loves a roll-up right now. Just read the notes on Carlyle.
Oh, the wealth management play.
Yes, industry watchers are calling Carlyle taking a majority stake in MAI Capital Management a symbol of the, quote, relentless private equity roll-up strategy.
Relentless is the perfect word. They're valuing MI at over $2.8 billion. Wealth management is just a giant game of Pac-Man for private equity right now.
It works, though. Sticky assets, predictable fees.
Sure, until everyone is doing it and the multiples get absurd. Speaking of absurd, did you see the drama over in the UK?
With BRCK Group?
Yes. Atlas Holdings floated an offer of 65 pence per share, and BRCK batted it away like a mildly annoying fly. They claim it fundamentally undervalues their prospects.
65 pence. I love British deal drama. It always sounds so incredibly polite, but behind closed doors, they're just screaming at each other.
Oh, absolutely. Atlas is probably drafting an angry, highly formal letter as we speak.
We'll see if Atlas sweetens the pot. But tomorrow we actually need to look at a massive deal that might run into a brick wall.
The AES Corp buyout, $33.4 billion from GIP and EQT. The antitrust regulators are officially waking up. Smray, spill the tea.
65 pence a share. That was the magic number Atlas Holdings thought would get it done for BRCK Group over in the UK.
And BRCK swatted it down so fast there's probably still a breeze in the London boardroom.
They pulled out the classic fundamentally undervalues our future prospects line. I love when boards use that. It's the corporate equivalent of saying you deserve better after a bad breakup.
Except usually you actually have prospects. I read their last quarterly report, Nate. BRCK is absolutely delusional if they think a white knight is going to swoop in and offer 80 pence. Atlas gave them a perfectly reasonable premium based on their actual cash flow.
You're looking in the rear view mirror, Maya. Atlas knows exactly what they're doing here. It's a classic private equity lowball. You float 65, you wait for the fake outrage to settle, you close at 72. It's just the dance.
It's a waste of time. BRC doesn't have the leverage to dance. The board is just trying to justify their seats for another quarter before inevitably caving.
Brutal? Remind me never to negotiate with you.
I prefer efficient. If you want to see how the big kids actually negotiate, look at what Apollo is doing.
Oh, you mean the $10 billion flex?
Exactly. They're reportedly buying Atlantic Aviation right out of KKR's hands. $10 billion for private jet infrastructure.
Talk about knowing your audience. Private equity buying the exact places they park their Gulfstreams. It's almost too perfect.
It's a phenomenal cash flow business, though. High barriers to entry, completely captive customer base. You can't exactly build a competing private terminal at Teterboro tomorrow.
True, but 10 billion is a steep multiple, even for monopoly parking spots. I really want to see how they structure the debt on that one.
Well, speaking of steep price tags, we need to talk about Biogen throwing $5.6 billion at Apellis.
Ah, yes, the rare disease play. Let me guess. You found something spicy buried in the contingent value rights? Tomorrow's radar. Keep your eyes on the SEC website tomorrow. We should get the regulatory filings for that $33.4 billion AES Corp buyout by GIP and EQT.
I'm already hitting refresh. The antitrust scrutiny on a joint buyout that massive is going to be brutal.
Brutal. Come on. Infrastructure plays always sail through. Regulators care about tech monopolies right now, not power grids.
Are we living on the same planet? Two massive funds teaming up to buy a utility giant is exactly what this FTC dreams about. Read the room, Nate.
I'm reading the room, and the room says the deal closes. Speaking of closing, did you see BRCK Group swatting away Atlas Holdings in the UK?
65 pence a share. BRCK called it a fundamental undervaluation.
Which is British corporate speak for add another 10 pence and we'll sign the term sheet tonight.
Exactly. They're playing hard to get. We'll see if Atlas takes the bait tomorrow.
We'll be watching. Talk to you tomorrow.